The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Juliana Tattlebaum and Steve Sedgwick. These are your headlines. Nestlé ousts CEO Laurent Freixe after just over a year in the role over an undisclosed relationship with a subordinate. The food giant now turning to the head of Nespresso, Philipp Navratil, to take the helm.
Russia's Vladimir Putin sits down with Chinese President Xi Jinping, calling him a dear friend as China looks to strengthen new global alliances.
China and Russia have remained true to their original aspirations and stayed the course, achieving fruitful cooperation across various fields.
Trust, mutual assistance, firmness in defending common interests form the basis of the comprehensive partnership and strategic cooperation between Russia and China.
And France's far-right National Rally Party says new elections are the only option as Francois Bayrou's government sits on the brink of collapse.
We kick off the trading day with another CEO departure, and this is key as we talk about another industry also under pressure. So let's get into the details here as consumer giant Nestlé has announced the immediate dismissal of CEO Laurent Freixe after only a year at the helm of the company. It follows an investigation into an undisclosed romantic relationship with a direct subordinate. The firm has appointed Philipp Navratil as its new chief executive. Let's get out to Carolyn for more. Carolyn, you've covered the company for a long time, and we know that sales have been under pressure, and this particular CEO was seen as a safe pair of hands. So more turmoil here, but also as we talk about change at the chairman level too. So just give us a sense as to what investors will be looking for today as we get set for, again, potentially roller coaster in the stock.
Look, Nestlé is known for being sort of a beacon of stability within Switzerland and in the world, a slow-moving tanker, and no one would expect that much upheaval from a consumer giant like Nestlé. So now we've got the second CEO change within the space of 2 months, and this is probably too much movement. This is like a speedboat, which is a company that should be like a tanker, and too much zigzag in terms of its strategy. Now, remember that Freixe, as you rightly point out, Karen, he was brought in sort of as a safe pair of hands after Max Schneider's 8-year tenure left the company somewhat disoriented. He was seen as diversifying the company, too much surgical M&A, and Freixe was brought back in to really focus on the core brands, which is, of course, coffee, frozen food, pet food. He was in the middle of the turnaround strategy, which was tricky, very tricky. In the first quarter of this year, it looked like things were looking a little bit better. The share price improved, but since then, shares have been sliding once again. If you take a look at the most recent numbers the company posted at the back end of July, we saw that organic growth was okay, 2.8%. That said, volume growth was almost flat, very weak. It points to a couple of things here. Yes, the company does have a lot of pricing power. It is able to push through higher prices. That said, consumers are very much balking at the higher prices, and they're simply buying less. So this is something that the company and the new CEO will have to fix at this point in time. Now, the new CEO, as you said, he is a coffee insider at Nestlé. He recently ran the global coffee business and Nespresso, and he's got a lot of homework. He's got a lot of things on his plate, really, in terms of reinvigorating that organic growth, reinvigorating volume growth, fixing the China business, fixing the vitamins business, and then, of course, this massive coffee deal with Keurig and JD Peet's, which is now kind of shaking up the U.S. market, where Nestlé coffee really has a very strong stronghold. This is going to be quite interesting as well.
Carolyn, looking through some of the analyst commentary this morning, it seems like one of the gripes that investors have is the fact that the board once again decided to appoint a permanent CEO, what they did a year ago, rather than appoint an interim CEO and engage in a thorough search process and potentially look for an external CEO. help us understand why the board would go with this decision to go straight for a permanent replacement, given, as you just outlined, this new CEO, his background is largely in coffee, and perhaps an external candidate would have been a little bit more well-rounded of a choice.
Look, fair point, Juliana, but I don't think the board had any time whatsoever, because it's only been 2 or 3 months since these allegations of this undisclosed relationship came to the surface. They simply didn't have the time. And with Philipp Navratil, they have someone who's very much transformed the coffee business, and people say he's got a very strong track record. I'm looking at an analyst note from Fundable here, and they say the appointment of Navratil, who's a proven leader with an excellent track record, is encouraging. But again, they do point out as well that investors' nerves have been tested for a couple months. So I simply think there wasn't a whole lot of time to appoint someone from the outside. Now, I want to come back to some commentary from JP Morgan overnight. They say it is disappointing that the new CEO is now boxed into his predecessor's strategy, which really wasn't working in the first place. Now, others would argue, hey, for a tanker like Nestlé, you got to give them a little bit more time. They're in the middle of a turnaround. This is what Deutsche Bank has been arguing all along. We need to give them a little bit more time, and things are actually looking up. This is not going to be an overnight fix.
Brilliant work, Caroline. Thank you very much indeed for joining us on the story. I know you're doing a lot of other work out in Zurich, so thank you for that one. In fact, are you still in Zurich or somewhere else?
I'm in Bern, the capital.
Bern. Lovely Bern. Okay, lovely. Well, you enjoy yourself. Thank you very much indeed for that. Let's put it in context. I think Caro's covered everything we need to cover about the company itself. It's struggling. She said the organic sales are okay, 2.8, but the mean for this company and the entire sector, which I've had a good look at for a long, long time, is 4%, and they're nowhere near that 4% level. They have got a chunky divvy. They trade around 4%. But what I wanted to move on to was, okay, maybe I'm going to upset half the men out there as well, but it's always the blokes, isn't it? And I know that it takes two to tango. And I know this is taking us away from the official line, but truth of the matter is, when will these men learn? When do they realise they're not omnipotent? Things will get found out. And also, just tell the company. Who are these? You've got the Kiss Cam guy. I don't even know his name. Coldplay. You've got the former boss, our former boss, Jeff Shell. You've got Easterbrook, was it, at McDonald's? Looney at BP. There must be dozens of them. I was like, really? Well, who do these people think they are? The rules are really clear. You and you and you, we have to do these modules every single year. I bet Nestlé is exactly the same, telling us what's appropriate, what's inappropriate, when we need to change our reporting lines as well. It's not hard, is it?
No, and you think when you've risen to this position. This guy, Laurent Freixe, in the role for 1 year, been given the role of a lifetime. Many thought that he was going to be a Nestlé lifer, to risk giving all of that up. Ultimately, he did, but it does seem careless when you reach that level to risk it all.
Is there something in the psyche of certain gentlemen, and again, I'm yet to see a woman who has the same attitude, but I'm sure viewers can give us some examples, of certain men, they get to a certain point and they think that they are all powerful, and they think it's more like an autocracy rather than a company run by shareholders and a whole host of other people.
Well, it's just by numbers. If you look at the ratio of male to female CEOs, it's 9 out of 10 are male versus female. So it's just by numbers, surely.
Well, there's a good advertisement for equality in the newsroom, or in any company for that matter. All right, I think we've got to move on.
Let's take a look at European futures. We're obviously going to be keeping track of Nestlé shares this morning. When you look across the analyst community, most are out there with notes and advice saying that this is going to be unhelpful for Nestlé shares, which have underperformed Unilever over the last year. Nestlé stock down 17% over the past year. Unilever down about 5%. So certainly one to watch. Outside of Nestlé, we are looking at the Xetra DAX pulling back about 1/3% at this stage. Italian market not doing a whole lot. The French and British markets looking to open very, very slightly in the green. As for U.S. markets, the first day of trade this week after being closed for the Labor Day holiday yesterday, looking at a muted start to trade as investors return from their long weekend. Now, in the terms of geopolitics, Russian President Vladimir Putin has thanked his dear friend, President Xi Jinping, for his welcome to China. The leaders began bilateral talks earlier this morning, with the Russian president saying relations between the countries are at an unprecedentedly high level. The leaders were all smiles alongside Indian Prime Minister Narendra Modi at yesterday's Shanghai Cooperation Organization summit, with the gathering set to continue as China hosts its largest ever military parade in Beijing tomorrow. Putin and Xi used the opening remarks of today's bilat to hail relations between their countries.
The memory of being brothers in arms, trust, mutual assistance, firmness in defending common interests form the basis of the comprehensive partnership and strategic cooperation between Russia and China in the new era. We were always together then, we remain together now.
China and Russia have remained true to their original aspirations and stayed the course, achieving fruitful cooperation across various fields. China is willing to work together with Russia to support each other's national development and revitalization, firmly uphold fairness and justice, and promote the building of a more just and equitable global governance order.
U.S. President Donald Trump has slammed Washington's trade relationship with India as a totally one-sided disaster, doubling down on his criticism of New Delhi. The president claimed India has offered to slash its tariffs on the U.S., but said it is getting late. Trump's comments come amid souring ties between the nations and amid Indian Prime Minister Narendra Modi's visit to China for the Shanghai Cooperation Organization summit. Let's get you a look at Asian markets and the overnight trade. A mixed session in the region. Nikkei 225 trading higher. The Nifty 50 over in India also trading modestly higher. A bit of a pullback in the Chinese markets. Let's welcome Kunal Desai, Portfolio Manager, GIB Asset Management. Kunal, great to have you with us. It's always a pleasure to have you. And particularly this week when we're watching these fascinating conversations unfold in China. One of the most interesting relationships, I think, to watch this week is that between India and China. What does it mean for India to be potentially moving closer to China? As an investor in this region, is it a good thing to see India deepening ties with China?
The global order is changing, it seems. So this was definitely a surprise. And right at the outset of the year, there was an expectation that, particularly given the personal relationship between Trump and Modi, that the strength between US-India relations would be high. Now, what we've seen is much change, driven by tariff policy, driven by probably some of the stubbornness on Indian policymakers, really to push back on some of the changes that were required. There are a lot of differences in terms of what both China and India require over the next 5 years for both of their investment models to thrive. China obviously has this push towards manufacturing and export-led growth, which still remains in place. India is really doubling down on its Make in India drive as well, really to find jobs for the 12 million people that require employment each year in that market. So even though you do get these changes in terms of rhetoric between the two nations, there are still a number of differences which we believe are in place. I think the fascinating thing will be market performance now. And the Indian market has largely shrugged off these concerns, and the next 12 months will be particularly important to see how that evolves.
Why do you think the Indian markets have shrugged off what's going on? And it's interesting you describe India's approach so far as being one of stubbornness. Why do you think the lack of concern there? And do you think investors are mispricing the risk here to India's economy?
Well, I think there's two things. The first order impact of these tariffs to India is manageable. So when you look at US exports, it's about 2.3% of GDP. When you strip out some of the more exempt sectors, pharma, IT services, plus also high import value goods, it takes you down to about 1.3% of GDP. Now, if we move to this 50% tariff new normal, that will likely have a haircut of about 80 basis points on annual growth. Now, this can be managed through counter-cyclical stimulus. I think what's more concerning for India over the longer term is if this sustains and the second order impact, particularly on job creation. India is probably the market in the world which requires the job creation market to thrive. That 12 million number is definitely something that is important. Plus, off that 12 million number, about 4 million is white-collar jobs. So when you have the threats of tariffs, plus the threat of AI, in terms of disrupting the job market, this can create an issue. But really, for the first order impact, that's manageable, which I think the market has largely digested.
Can we get into the motivation then to own India? Because some of the big themes around the AI technology story, the role that India was playing in manufacturing, trying to diversify away from the Chinese market, that was one big technology theme. The other has been the domestic market. What you've seen in terms of the huge growth story there, almost like what you've seen across in China in the early days, big themes that investors have been keen to play. Does any of that come unstuck as you talk about some of the numbers and what could be destructive on the jobs front? What happens to the Sensex if some of these themes come unstuck?
So I think when we spoke in January, February this year, our call was that China was a contrarian play for this year. And that's largely played out where we've seen significant price appreciation. We would go to say that India is probably the contrarian play for next year within emerging markets. Now, this might sound strange given the valuation premium that India commands. But when you look at price performance, India has underperformed world markets by about 4 percentage points this year. We're on track in India to have the weakest relative performance versus EM in 2 decades, negative 15% versus emerging markets. So there is this price opportunity. When you look at ownership, foreign ownership in India is now at 15-year lows. It's a consensus underweight for emerging market and Asia funds, and this is something which creates an opportunity. Now, we touched on tariffs. We believe that first order impact is largely manageable. But really what we look for in the Indian market over the next 6 months is this counter-cyclical stimulus. What will happen in terms of driving pay commission improvement, paying private and public sector workers more? Tomorrow, the Goods and Services Tax Council is meeting. There's likely to be a tax cut, which can provide stimulus for that market. And also when we strip back what's happened globally this year, of the top 10 global indices, which controls about 90% of market cap, it's all been driven really by a valuation re-rating. The earnings story hasn't been so powerful this year. And if that disappoints over the next 6 months, market investors will really look to earning certainty and visibility, which is where the Indian market focuses.
So let me just flip the conversation then to your contrarian play for this year, being the China market. Yeah. Stunning run. If you look at what the Shanghai Composite has done this year, in individual stocks that are linked to AI, there's been an enormous bounce. Some of the big semiconductor plays, for instance. The Chinese authorities are very keen to crack down on any disorderly competition that they see in the AI space. Does that cap some of the profile, the growth profile of companies that have been running very hard?
It's a good question, and I think one of the key themes that has emerged in China in recent weeks is this anti-involution concept, the idea that policymakers are pushing back on profitless growth, looking to improve profit pools rather than just the growth of sectors at the cost of profitability. So this can actually have a positive impact from an investor perspective on some of these areas. One of the concerns when we think about the relative valuation or the discount of AI capex plays in China versus the US has been what the long-term margins will likely settle for key segments. But if we're now moving to this point where actually the focus on profitability is as central as revenue growth, this can actually create quite an attractive investment opportunity for AI capex.
I had the privilege of speaking to the NSE CEO, Mr. Chuan, earlier in the year, and he admitted, look, there is a problem with. We need to up the rules. We need to improve kind of some of the regulations. We need to make it easier for Indians and international investors to get into the market as well, to restore faith in the market, to stop them hoarding cash in other ways and get them involved in the stock story as well. Have they made any moves on all that? I spoke to him in the spring.
Yeah, well, they have. And I think one of the reasons why the Indian market hasn't fallen more, given that foreigners have left the Indian market, has been the power of the domestic equity story. So Indians in India saving more and spending more in financial assets. So that's been something which has continued for the last 6-7 years. When you look at flows from domestic Indians, it's about $60 billion. Foreigners have sold $15 billion, but that's been more than offset by the domestic equity channel. This will continue. And this is a story for all emerging markets, essentially to reduce their vulnerability for risk on, risk off, foreign capital coming in and out. They need to incentivize their own populace to buy their market.
It sounds like post-1997, 1998 redux, because, reduce the risk of foreigners taking money in and out. I'm sure I read all this one in the East Asia crisis as well. The Indians are learning the lesson. We've got one more question for you.
Kunal, you just made me think of this in your response to Karen's question around China and the authorities cracking down on profitless companies, because we got earnings from BYD this week, and we saw a plunge in their profits at 30% down year on year. That was their net profit number, but revenues grew, and BYD has just been exploding in terms of gaining market share in China, but also, crucially, in Europe. Do you have a view on the EV space in China and the fact that it does seem to be a race to the bottom on price as they just churn out model after model that are really affordable compared to a lot of the European players?
So the EV space is an area which we've avoided for exactly that issue. I think what has happened is share prices have already begun to react of what they anticipate long-term and medium-term margins to settle at. So EV is one case, batteries is another, solar, other parts of manufacturing. E-commerce as well. You've seen JD, you've seen Meituan, a race to the bottom, which has disrupted their pricing. So your thesis is completely right. That's really been why these have been areas to avoid. The question for us, though, is what these margin constructs will look like in 12 months' time. Shares are re-rated, they're repriced, earnings haven't caught up. That creates risk, but it also creates opportunity for where we're looking for leadership on that
Just
side.
quickly, 10 seconds. Can you give us a final trade? What do you like in the area?
In which space?
In EM.
In EM, India has been an area which we're adding, and also Korea as well.
Korea, South Korea.
Kunal, thank you so much for joining us. It's always great to have you. Appreciate the views. Kunal Desai, Portfolio Manager at GIB Asset Management. For more on the smiles going viral from the SCO summit in China and that hug between President Putin and Narendra Modi, you can head to CNBC.com.
Coming up on the show, it's a crunch week for French Prime Minister Francois Bayrou as he kicks off talks with opposition leaders ahead of a confidence vote. Plus, UK borrowing costs rise as Prime Minister Keir Starmer reshuffles his economic team. And we'll get an insight into the construction sector when we speak to Dominic Van Achten, CEO of the world's second biggest cement maker, Heidelberg Materials. That interview is coming up at 8:30 London time.
France's far-right party says it is preparing for the possibility of, you guessed it, no, not a confidence vote this time, a snap election. But that's ahead of the confidence vote in the Prime Minister Francois Bayrou's government. The National Rally President, Jordan Bardella, said the party has already chosen 85% of its candidates. Wow. It comes as Bayrou holds talks with opposition parties this week to try to prevent a government collapse. National Rally is due to meet with Bayrou today. French business leaders have sounded the alarm over the current political crisis, urging the government to provide certainty for business. The head of the MEDEF business lobby warned of a real recession risk, saying the nation was already in a precarious situation. Charlotte, you've had a break from this. I hope your holiday was...
Nothing happened while I was away, right?
No, just the same old, actually, I'm afraid to say, as you well know. Where do we go now? I mean, I don't really know how this moves forward.
Well, we always knew the autumn was going to be tricky around the budget negotiations, but this vote of confidence called by the Prime Minister last week kind of caught a bit everybody by surprise, and so things could be accelerating now. And of course, it's all around the budget. We know that has been difficult before. The predecessor of François Bayrou, Michel Barnier, fell on the budget last year. So now François Bayrou making this confidence vote next week. So it's all around making the cuts and trying to get people on board with these cuts. So looking for 44 billion euros in tax hikes and spending cuts for the 2026 budget. That's on top of the almost 60 billion euros in cuts that they had to do for this year. So remember back in July, he made some proposals calling for a blank year, so not indexing pensions and public sector pay on inflation, for example, cutting some public holidays, 2 days of public holidays. And it looks like there's a lot of opposition on all these measures. So far, Bayrou has survived because he had the support of the far right or of the socialists. Now, both groups have come out saying they will not support the Prime Minister in the vote next week. So that means that for now, the most likely scenario is that the government will fall. So what happens next? Then the President will have to pick a new Prime Minister. He can pick whoever he wants, including François Bayrou again. Otherwise, other options is potentially to dissolve Parliament, but the President has already said he doesn't want to go down that route, and a lot of parties don't want to go down that route because polls show that the far right could actually be in the lead if an election was held very soon. So we are in this big uncertainty here again. We know that the negotiations were going to be tough. We have an acceleration of time here. Maybe it's a good thing because we know under Michel Barnier, the negotiation went on for weeks to end up in a result that we kind of expected. Nothing's accelerating. We'll have an answer next week. But again, the problem is that long term, maybe we've seen these moves in the bonds and the stock markets, that long term, we know that none of the parties in the very fragmented parliament agree on how to address the fiscal situation. That is the core of the problem there, is that we know the situation has been deteriorating in France and that none of the parties agree on how to address the issue. So this thing keeps on dragging on. Every time a government falls, new proposals, but the problem doesn't seem to be addressed.
Charlotte, can we go into a little bit more detail on what the options are if President Macron ends up choosing a new prime minister, because it feels like that is the consensus outlook at this point. You say he could even reappoint Bayrou, but what are his other options? Is there a chance he looks to the left to appoint someone from there, or are we looking at a technocrat at this point?
So all the options are open at the moment. We know that he has speak before Barnier and Bayrou, two very savvy political operators, people that have been in politics for many decades, and they haven't managed to get people on board, because that is the key. Whoever he appoints next, they will have to bring on board different parties in parliament that is extremely fragmented. So trying to find an operator that can do that would be extremely difficult. So technocrat could be the answer. But here again, trying to find a majority in this parliament is a massive, massive headache.
We spoke off camera to someone who has his finger on the pulse on this, and I'll say no more about that because I don't want to out the person, who said the problem isn't the list of prime ministers, the problem is Macron. Macron is a liability and none of the major parties want to work with him anymore. That is what this gentleman, who is a countryman of yours, told us.
And also Macron's created that mess. You know, he's the one who called the snap election last year, who created this fragmented parliament. And so now again is what can happen next, what happened to his legacy, because he said he will not resign. So people calling him to resign because of the instability of the political institutions, because of we can't find a majority in parliament. Now he said he completely discarded the idea. He said he will go to the end of his mandate. But you're right, there's a question of what does it mean for his legacy, for his party. And actually a lot of people saying, you know what, we're seeing the rebuilding of the traditional parties. When he came in with his third way, a new party, they imploded French politics. It looks like we have a rebuilding of the traditional parties, but the question of who can have a majority, it looks very difficult still.